In 1980, silver prices hit $50 an ounce. The official story blames market forces. It wasn't. The Hunt brothers owned oil, lots of it. Nelson and Bunker Hunt controlled vast reserves in Texas, Libya, and across the Middle East. By the 1970s, they were among the wealthiest men alive. Their net worth exceeded $1 billion each, when that still meant something. But oil wasn't enough. They wanted more. The conventional wisdom is simple. The Hunts tried to corner the silver market out of greed. They accumulated massive positions. Prices soared. They lost everything. A cautionary tale about hubris, but that's the version everyone tells. It's also incomplete. Start in 1973. The Arab oil embargo had just crippled Western economies. Inflation was spiraling. The dollar was weakening. Bunker Hunt became convinced that paper currency was doomed. He needed something real, something tangible, something that couldn't be printed into oblivion. Silver fit perfectly. It was a commodity, a store of value, a hedge against collapse. And crucially, the global silver market was small and fragmented. Bunker saw an opening. He began buying, quietly, methodically. By 1974, he'd accumulated roughly 55 million ounces. His brother Nelson joined in. They weren't acting on whim. They were executing a strategy. The brothers believed they could acquire enough silver to control price, not through manipulation, through simple supply control. If they owned the majority of available bullion, the market would have to negotiate with them. By 1979, the Hunts held over 200 million ounces of silver. That was roughly 1/3 of all silver held in private hands globally. The market began to notice. Prices started climbing. January 1980 arrived. Silver was trading at $15 an ounce, then $20, then $30. Here's where the official story takes over. Speculators piled in. Futures traders smelled profit. The price became untethered from fundamentals. It was a bubble, pure and simple, greed feeding greed. The Hunts were villains who'd corrupted a market and would pay the price. But pull back. The Hunts didn't invent this story. They were responding to something deeper. The 1970s had shattered faith in institutions. Watergate, Vietnam, stagflation, currency instability. The wealthy weren't alone in buying hard assets. It was a rational act in an irrational decade. The Hunts also weren't hidden. They filed public positions. They didn't sneak. They moved deliberately. And critically, they were right about inflation. They were right about currency debasement. Their thesis wasn't wrong. Their execution ran into a system that couldn't tolerate it. March 1980, the COMEX, the Commodity Exchange, changed the rules. Suddenly, you couldn't take delivery of physical silver. You could only trade contracts. The Hunts' leverage evaporated overnight. They couldn't access the metal they'd bought. Their position became a paper loss. The Federal Reserve tightened credit. Banks called in loans. The Hunts needed cash. They had to liquidate. Prices collapsed from $50 to below $10 in weeks. They lost an estimated $7 billion. It was catastrophic. But it wasn't random market forces. The real story is this. The Hunts were wealthy enough to challenge a system. They accumulated a commodity that threatened to expose currency instability. The establishment couldn't allow that narrative, so the rules changed. The game was rewritten mid-play. Were the Hunts greedy? Absolutely. Did they over-leverage? Yes, but so do countless traders who lose quietly. The difference is scale and inconvenience. The Hunts' bet exposed a fragile system that couldn't be tolerated. The aftermath was brutal. Bunker faced a $134 million judgment in 1988. He'd already declared bankruptcy twice. Nelson survived better, but both men's fortunes were shattered. They spent decades in legal battles. Their empire crumbled. But here's what matters. They were right about inflation. They were right about currency. They were right about needing tangible assets. They just didn't account for the system defending itself. When you're wealthy enough to matter, the rules change. That's the real lesson. The silver market is still regulated. Futures positions are still limited. Delivery mechanisms are still controlled. The system learned from 1980. It built walls, not to prevent fraud, but to prevent wealth from consolidating enough to ask uncomfortable questions about how it all works. The Hunt brothers weren't heroes. They were ambitious men who got crushed, but they weren't crushed by market forces. They were crushed by a system protecting itself. Understanding that distinction changes how you see every financial crisis that follows. Subscribe to see how power reshapes markets when it feels threatened. New financial collapse stories every week.